Today, we're diving into a really compelling argument. The idea that some quiet, very strategic moves by major world governments might be setting the stage for an absolutely explosive rally in the price of silver.
And when I say explosive, I mean it. The source for this analysis suggests we could see a price spike into the quadruple digits. I know, that sounds crazy, right? So how could we possibly get there? Well, it all starts with one central question.
And here's the core idea we're digging into. If just one major central bank starts seriously buying up silver, could that trigger a kind of snowball effect, a domino rally, where other nations feel forced to jump in, causing the price to go completely parabolic? That's the hypothesis.
So let's break down the evidence behind this really provocative question. The argument is that something fundamental is changing right now in how the world's most powerful players see silver. This right here is the heart of it. For decades, we have basically put silver into one of two boxes. It's either an industrial metal or it's a monetary metal. But now, a third critical element is being added to that mix: national security. This shift, this new hybrid status, is the key to everything.
So clue number one in this whole investigation comes from countries that are making direct moves to treat silver like, well, money again. Something we haven't really seen for decades.
And our first stop is India. Now, this is a country with a really deep cultural and financial link to precious metals, and they just took what the source is calling a truly historic step. And here's what's so crucial about this. By expanding their collateral rules to include silver jewelry, the Indian government isn't just making some small policy tweak. They are, in effect, re-monetizing silver, unlocking its financial value for millions and millions of their citizens. That is a big deal.
Now, while India's move is really about empowering its people, Russia is taking a much more direct state-level approach. They're being identified as a pioneer here, one of the very first central banks to make such a public and significant move into the silver market.
And we are not talking about some small symbolic purchase. No, Russia has explicitly announced it's putting over $500 million toward buying silver for its state reserves over the next 3 years. This is a direct buy from a central bank.
And then you've got Saudi Arabia. Their central bank also put tens of millions of dollars into silver, but they took a different path than Russia, and it's a distinction the source material is very clear about. So you can see the difference here. The Saudis invested in ETFs, which are basically paper claims on silver. Now, the source is pretty skeptical about ETFs, questioning if you can really get your hands on the physical metal when you need it. But the key takeaway is the same. Yet another major central bank is plowing millions of dollars into silver.
Okay, so that was the money angle, but the second set of clues is all about a strategic shift, where several major nations are now reclassifying silver as a critical resource for national security.
First up, we have China. In a move that has huge implications for the global supply, China is taking steps to keep its silver inside its own borders.
So starting in 2026, you're going to need a special license to export silver out of China. And look at the context here. This isn't happening in a vacuum. You can see their silver stockpiles have been absolutely plummeting since 2020. It looks like they're using way more than they produce, and now they're moving to lock down whatever supply they have left.
Now, you might be thinking this is just something that countries like China are doing, but nope. The United States has also just made a formal declaration signaling a huge shift in how it views silver's strategic importance.
For the very first time, silver has been added to the official U.S. list of critical minerals for 2025. This isn't just semantics. This designation is a formal recognition that silver is vital for everything from our high-tech industry to our national defense.
And this trend isn't limited to the superpowers either. If you look down under to Australia, you see a very similar move, which just reinforces how global this shift really is.
In its own 10-year strategy, the government of New South Wales in Australia explicitly named silver a priority mineral. But here's what's really interesting. They don't just talk about its high-tech uses. They also specifically call out its strong demand as an investment product, and they even put the word currency right there in parentheses. They see both sides.
Okay, so we've got countries treating it like money again, and we have others classifying it as a national security asset. So how do we get from these clues to those wild price forecasts from the beginning? Well, it all comes down to echoes from the past.
To understand where we might be going, we first need to look back. The source points to the last major bull market for precious metals back in the 1970s.
Back then, silver hit a peak of about $49 an ounce. Okay, remember that number, 49 bucks.
Now here's where it gets crazy. The source argues that if you take that $49 peak and you adjust it for all the US dollar inflation that's happened since the 70s, the equivalent price today, that historical echo, would be $661 per ounce.
But wait, there's an even higher target. This number comes from looking at silver's historical value compared to other big economic indicators, things like the stock market and GDP. And based on those historical relationships, the price target becomes $921 an ounce. The main takeaway here is these aren't just random numbers plucked from the air. They're projections based on historical financial patterns.
All right, so we've looked at the massive global scale of all this, but now let's bring it all the way down to the individual investor, because our own psychology plays a huge role in how these markets actually move.
The source uses this to illustrate a feeling we've all probably had. When the price starts to run up, let's say to 51 bucks, a lot of people feel regret, that fear of missing out. They kick themselves thinking, I'm an idiot. Why didn't I buy it when it was cheaper?
But then, what always happens in markets, the price pulls back. It dips. The source describes this moment as silver effectively going on sale. It's a potential buying opportunity.
And yet, what's the common reaction? It's completely counterintuitive. Fear takes over. Instead of seeing a discount, many investors get spooked and back away, thinking, whoa, I'm not buying that, even though the price is now lower than when they were just kicking themselves for not buying.
And this really brings us to the final question at the heart of this entire analysis, the dilemma every investor faces. When you see a market pullback, are you looking at a risk you need to avoid, or is it a fleeting opportunity you should seize? Given the huge global shifts we've just looked at, it's definitely something to think about.